Analysts say that they expect mixed sentiments with a positive tilt in the Nigerian equities markets, citing current activities presenting a good entry opportunity for investors. And I have Tijani Oladipupo, the business head at Norrenberger Advisory. He joins me as we look at the equities market. Thank you so much for your time today, Tijani. Quite an interesting week we've had, talking about some economic data coming in there with inflation there. But how's the market interpreting the inflation data?
Yeah, absolute pleasure to have me here. Thanks for having me. So far with economics data, we've seen great reactions from the market, especially with the downward trend in the equities market. Quite a number of variables have played out. In particular, we've seen how inflation, how the CBN has reacted back-to-back increase in NPR to adjust with the moment in inflation, and we've also seen that actively in Nigerian equities markets. Of course, we've experienced in the last couple of weeks how the market has gone to the south side, to the high yield going northwards in the fixed income market, and how the market has actually reacted in turn to that. It's been an interesting one. We've seen quite a large volume of funds finding its way into the fixed income market, and as expected, quite a number of stocks are turning into value stocks with low PE ratios, even on the back of the interesting earnings that has come out in recent times.
All right, now, because we've seen that sell pressure continue to play out there yesterday, but what's driving sentiments today?
So one of it is that yes, even on the back of the earnings, one of it is that a lot of expectations around big players, expectations around the PFAs and others are moving into the market to see whether the market will turn around. Unfortunately, it's obviously a mixed sentiment. All the force of the market feels on the back of a stronger earnings releases, the market should be doing better than it is. But unfortunately, of course, it's simply goes to show you that the strength of the big players and the appetite for the fixed income market at the moment.
Yeah, but when you analyze the quarter as a whole and you're looking at how the market has performed this year, the third quarter hasn't really been quite the best. We've seen markets down about almost 6% in that time.
Say that again. I didn't hear you, please.
Yeah, I'm saying the performance of the third quarter, when you look vis-a-vis the full year performance of the market, we're seeing that the third quarter, we see the market down around 6% so far. Do you think this would slightly continue to the year end?
Oh, well, again, we should look at the major variables, major factors driving these performance. Obviously, even on the back of these performances, it's obvious that the volume pullers are still doing a lot of their play in the fixed income market than the equities market. And of course, we've also seen that we've experienced the exits of foreign portfolios. Also, coupled with if you consider that alongside the direction of the volume players, you can see that that's what the market is seeing, and that's what we expect to see, and that's what we also saw the last couple of days with the markets are recording down day consistently, and so it shows that there's still a lot of sell pressure in the market.
Yeah, but looking at the performance of the Nigerian market compared to its peers here in West Africa, we're looking at the Ghana Stock Exchange. It's down about 9% year to date. The BRVM, it's up just about 2%. Do you think this is how we're going to see momentum play out for the full year?
Oh, well, for the rest part of the year, I don't see a significant shift from the current. We've seen year-to-date returns edging downwards from where it used to be to about closing at about 15.49 yesterday. I do not expect any significant shifts away from this, bearing all these other interplay of these variables that we mentioned earlier.
But looking at catalysts now that could drive the market, so what can we expect down the line?
So again, our catalysts, there's quite a number of expectations. We look to the direction of the volume players once again. There's a lot of expectation from the PFAs. In terms of liquidity, we've seen what has played out so far. We're not expecting any significant shift. Of course, even down the last part of the market, especially with the upcoming of the elections, we do not see a significant shift from the current trend.